change. They were expecting 46,000. It came back at 22,000. At 9:45, in about 30 minutes here, we have final services PMI. At 10 o'clock, we have ISM services PMI. They're expecting a 53.5. Everything above 50 is considered an expansion. At 10:30, crude oil inventories, and then that is it for the trading day's news. We had a significant little switch here during the pre-market time frame that has switched back. So for a moment, the June rate cut had flipped to the July, out to July, so pushed further out into the future. And that is not priced in, and what we're going to see here, notice that we're going 44.8, 44.8. It's a tie right now. So it'll be interesting as we get into the first 30 minutes of the day if that rate cut stays in June or if it's flipped back out to July. Why that is important is because if market participants are perceiving that the rate cut will be further out into the future, that isn't necessarily priced in. One thing that we were looking for as we were going into our afternoon and then into our pre-market timeframes this morning is a very similar type of situation to yesterday morning. We were using the gap fill statistics for Wednesday, 76% over the last 180 days, 78% over the last 90 days, and inside of the 20 handle having a 69% probability of filling the gap, using that 20 handle, like we used it this morning or yesterday morning, to lead us into the gap fill, and then potentially into the continuation of the trend. The second part of that move is yet to be seen, but we have fallen from the 20 handle right into the gap fill. It's a 20-point move. The failure level was the 10 handle. Now, we haven't completed this gap during trading hours, so it's not considered filled, right? Not yet. But essentially, we hit our target. That's the 2-to-1 risk-reward ratio from the 20 handle. Now, what we're watching for as we go into the rest of this morning here is to see if the VIX continues to defend this support level. Now, we went into the overnight time frame with this pullback, having broken through our shorts from highs of the week to lows of the week, having this pullback with a line in the sand at the 60. It went one tick in, one tick. And it does present the possibility that there could be an opposing measured move short here in the middle of this range as we're going into our trading day. If there was a bullish case that could be made for the indices here as we're going into the end of the week, it's that the VIX respects this new 50% short above us here at the 1930s. You could make a case that we're completely stuck between two opposing setups. And what would that lead us to from the perspective of our other leading indicators? Well, in terms of the dollar, there's no effect on the indices. There's a negative correlation for the currencies and the commodities with the exception of Bitcoin. So the dollar falls from those levels. You have a bid inside of euro, pound, Aussie dollar, gold, silver, crude oil. This weakness would create or correlate with weakness inside of Bitcoin and Ethereum. Bank is inside of long setups. And this is probably the best case that you could make here for there being, especially for the Russell, a very bullish trend here as we're going into our morning timeframes. And I'm going to talk a little bit about the YM and the Russell here in just a moment. The ES and NQ are the weakest parts of our market. NQ is being front run inside of it. Absolutely massive front run inside of a 50% short. Where the ES traded it, NQ was front run at a 38.2% line. It was front run at a 38.2% line. So note here that this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.